We are back with you on the Market Day Report. Thanks for joining us on a Monday. I'm Marlon Bowling with you. We're going to watch your grain and livestock market activity right now. And let's go ahead and zero in on the corn and soybean trade as we get things rolling here on the futures market. Let's go to the corn first and get an idea of what's going on in the markets here. So far in the early going on the daytime session, we have the corn showing a 6 1/4 cent gain, with July now trading at $4.24.5 per bushel. That's off of its overnight low by at least a nickel. We have December now 6 3/4 higher at $4.26.5. And looking at the soybean trade, that was fairly sharply higher overnight, and it's following through this morning. July soybeans 14 1/4 higher on the open at 11.46 1/4, and even that is about 9 cents off of its overnight high. Now we have the November new crop soybeans 19 1/2 higher at 11.04 3/4, within a penny of its high of the opening range here in the overnight session. Just a quick peek at Chicago July wheat. We'll see what the futures are doing there, and it's following along to the upside, 8 3/4 higher on July at 5.06 per bushel. So let's bring in Dewey Strickler of AgWatch Market Advisors in Franklin, Kentucky. And Dewey, good to visit with you once again here on a Monday morning. That's quite a way to walk into the office today to see prices surging like that over the weekend.
Yeah, pretty much they're picking up where they left off Friday. We've got funds in here aggressively buying the markets here this morning. Everybody's looking at weather. I can't really say that the weather looks that inflammatory. Yeah, we're looking at some warm temperatures to develop here over this week, but we're also looking at normal precip in a lot of areas, maybe below in some and a little bit above normal in others.
Now I see where USDA says that we sold 125,000 tons of soybeans to unknown destinations overnight or over the weekend for the marketing year of 2016 and 2017. We know who that usually turns out to be, but I guess that's adding a little fuel to the fire here in the soybean bullishness today.
Oh, I think it's giving a little bit of pop in the market. The funds are just kind of chomping at the bit, looking for a reason to get along the market, and that's, anything like you see such as that is certainly going to give them a little bit of ammo.
All right, Dewey, realistically, how much danger is there that we're getting too many of the people in the commodity funds getting to one side of the boat too early in the growing season here?
It is extremely huge. The thing that I have noticed is that we are within 100 million bushels of getting close to the record long position for the funds. Also, your commercials are short a near record. Now, whenever you have those two institutions at opposite extremes, such as what we're seeing here, it's usually bad news for the bulls.
Wow, that's very interesting, something to definitely keep an eye on. Now, I wanted to ask you, too, about the wheat market showing a good, strong gain here in the early going this morning, even though harvest is underway. What's going to win out? Carrying along on the coattails of the soybeans surging higher, or the harvest pressure dragging it down?
Eventually, I think harvest pressure will come in because we're just basically getting started here, and we're just trading upward on the coattail of the soybeans, nothing more than that.
And I do want to take a look here at Kansas City wheat. July now 7 3/4 higher at 4.81 3/4 per bushel. On the Minneapolis spring wheat trade, we have July wheat there now trading at 5.42 3/4. It's up 3 1/4. But boy, big gains in the cotton market overnight with Tropical Storm Colin moving toward the southeast, dumping a lot of rain in some areas where they're already behind in planting. We're up 125 points in July cotton right now. December new crop up 107 points at 64.98 cents. Well, now it just ticked upward, 65.03 cents per pound. So we're up over 65 again. That's a look at our crop markets. We'll be back in a moment talking with Dewey Strickler about our livestock trade when we come back in 1 minute. Welcome back to the Market Day Report on a Monday. I'm Marlon Bowling with you as we get our livestock trade off and running as well. And we're going to bring in Dewey Strickler with AgWatch Market Advisors. He's based in Franklin, Kentucky, as we take a look at our livestock market action. A bit of a surprise late on Friday, Dewey, with the cash cattle market firming up the way it did. I think that caught a few traders off guard, and it looks like that's supporting our early futures trade today.
Well, we did break above an area of short-term resistance in the August contract of cattle. You do have some declining weights, and also you've got your futures at a a discount to cash, which I think is going to be supportive of the market.
So currently we have the August futures on live cattle now trading at 119.02 per hundredweight. That is up $1.22 from where we closed on Friday afternoon. We're about 40 cents off of our high of the day so far as we get rolling here. October now showing a price of 118.40. That is up $1.05 per hundredweight. December up 80 cents at 118.40. Meanwhile, on the feeder cattle side, real similar action here. We have the August contract now up $1.27 in value at 147.95 per hundredweight. And we have the September now up $1.12 this morning at 146.30. Meanwhile, October up $1 even at 144.75. It is noteworthy that in the live cattle and the feeder cattle trade, the nearbys are leading the charge with triple-digit gains. The deferreds are not quite as strong over there. Do you read much into that, Dewey?
Well, not really. I think eventually I could be looking here at the fat cattle basis, the August, trying to work up to the 125 area. August feeders may get a shot up here to about 156.
All right, now I want to take a look at the beef cutout values that came out from USDA Friday afternoon. That was not necessarily very supportive to the trade. That goes counter to what we saw in the cash market. Maybe you can explain the divergence here where we had the select cuts actually going down over $3 in value Friday afternoon.
Well, it may be just an aberration in the market. Obviously, you didn't have quite the demand in there for the beef there, and I think it's just more of an aberration here. I would expect we'll see that change here this week.
You do? Okay. All right. Didn't know if that was concerning to you at all or not. I do want to move on and take a look at the lean hog trade. Now, this is something to behold here. This last few trading sessions where we were making continuous new, I believe, contract highs. And we finished on a strong note last Friday in the lean hog trade. Now we have July on the lean hogs just down 3 cents at 85.95. It has been chopping around on both sides of unchanged in the early going here this morning. Got up as high as $86.50 per hundredweight. My goodness. August, 86.05 right now, and that would be up 17 cents from Friday. But we're kind of getting into, as I mentioned Friday, rarefied air in the lean hog trade, almost uncharted territory here in the last year or so. So we'll have to keep an eye on that. Dewey, thanks for joining us here on the Market Day Report to help analyze everything this morning. Appreciate that, and I hope you have a great trading week.
All right, thanks, and same to you.
Dewey Strickler with AgWatch Market Advisors. He's based in Franklin, Kentucky, so the hogs trying to trade higher everywhere except July right now. Cattle off and running.
All right. Well, thank you very much, Marlon.
You bet.